Question number 3, chapter 1. Following differences have arisen among P, Q and R. State who is correct in each case. Now over here it is not mentioned whether the partnership deed is present or absent. So in such a case we'll assume that the partnership deed is absent. A. P used rupees 50,000 belonging to the firm and earned a profit of rupees 5,000. Q and R want the amount to be given to the firm. Now over here P used rupees 50,000 which belongs to the firm. In sense he did not use his own personal amount. He's taken rupees 50,000 from the firm's capital and used it for making a profit of rupees 5,000. Now this 5,000 rupees is P's personal, which he made using the firm's amount. Okay, in such a case, this 5,000 rupees which P has made, the profit, he has to distribute it among the other two partners, Q and R, equally. Okay, he cannot take this amount for himself because he made this amount, he made this profit by using the firm's amount. Q and R want the amount to be given to the firm. Yes, this amount has to be given to the firm. But how much will P give back to the firm? He'll give rupees 50,000, the capital which he took, and the profit of rupees 5,000 which he made. Okay, so question number 3, the first subheading would be P will return back rupees 55,000. Okay, how did he get this rupees 55,000? 50,000 plus 50,000 which is the capital and 5,000 which is the profit he made to the firm. B. Q used rupees 10,000 belonging to the firm and incurred a loss of rupees 1,000. He wants the firm to bear the loss. Now over here Q, he used rupees 10,000 which belongs to the firm. Now Q, this partner, again he used an amount which belongs to the firm. So he used 10,000, the capital of the firm. But he didn't incur a profit. He incurred a loss of rupees 1,000. Had he incurred a profit of 1,000, this profit would have been divided amongst the would have been returned back to the firm or divided amongst the other two partners equally. Okay, but now since he incurred a loss of rupees 1,000, this whole loss of 1,000 has to be borne by Q. This 10,000 rupees only will be returned back to the firm, whereas the loss will be completely borne by Q. In the case of profit, all the partners will share the profits, whereas in the case of loss, only the partner who made the loss will be bearing the amount, and the capital which has been used, which belongs to the firm, will be returned back. Okay, so in this case Q will return back rupees 10,000 to the firm. C. P and Q want to purchase goods from Star Limited. R does not agree. Now in this case it's only the purchase of goods. Okay, there's no admission of the partner. In the case of purchase or sale of goods, we only see if majority of the partners have agreed. Okay, now here since the majority P and Q, two partners have agreed, whereas only one partner is disagreeing with the purchase of the goods, we'll go ahead with the purchase of the goods from Star Limited. So the answer here would be goods shall be purchased from Star Limited. D. The next one, Q and R want to admit W as a partner. P does not agree. Now two people, okay, Q and R, they want to admit W, but P does not agree. In the case of admission of a partner, it is compulsory for all the partners to agree. Until and unless all the partners agree, a new partner cannot be admitted over in the firm. Now here, since only two partners are agreeing, whereas one partner is disagreeing with the admission of a fourth partner into the firm, the fourth partner shall not be admitted. So the answer here would be W cannot be admitted. Admitted as a partner in the firm. E. The next one. R has given a loan of rupees 2 lakhs to the firm. So the thing here is that the partner R, he has given a loan to the firm and he demands an interest of 10% per annum. Okay, the rule here is in the case of a partnership deed, when a partner gives a loan to the firm is supposed to pay an interest of 6% back to the partner, not 10%, 6% to the partner. Why is this rule? Because this partner R, okay, had he kept this amount in his bank, this amount of rupees 2 lakhs, had he kept it in his bank instead of giving to the firm, then R would have definitely got some amount as interest from the bank, right? Now, since he has taken out this amount of 2 lakhs and given it from his bank to the firm, it is liable to the firm to pay an interest on this 2 lakhs to R, because there is no partnership deed over here. The interest on loan to be paid to the partner is 6%. Even though the partners P and Q do not want to pay the interest, the firm is still liable to pay 6% as interest to R. Okay, not at 10% but 6%. So over here we'll write R will be paid interest on loan at 6% per annum.